Hello, ladies and gentlemen, and welcome back to the channel. I know it's been a while since I last uploaded, but I appreciate the continued support on the channel. So before we get into this video, go ahead and smash that like button and hit subscribe if you haven't already. I've been looking at the analytics on the channel, and I believe it's something astronomical. Like 95% of the people who watch my videos are not yet subscribed. So if you are one of those people, go ahead and hit the subscribe button. It'll really help this channel grow and help people get a knowledge for what the stock market is doing and learning about investing and finance as a whole. So as I said, it's been a while. So let's get back into it because it's been a wild last 2 weeks in the stock market, and I don't think we're anywhere close to being done. So as you guys see, the Dow was down. This was Friday, 256 points. It was almost as low as right about there, about 600 points down, maybe even 800 points down. I guess that's about 800 points down at its low, which was absolutely crazy. I thought it was going to finish there. It did rise back up a little bit from some of the positive things that came out in the news. But again, it wouldn't surprise me if, Monday when it comes around, if the Dow is back down, another 600 points, or even if it's up another 600 points. It's just absolutely crazy. A lot of this stuff has never been seen before. If we go to the last 5 days, we got back up in the 27,000 range, then we dropped 700, then we rose back up, dropped, rose back up, massive drop, and then we kind of started to climb a little bit more. Just crazy volatility that's been going on. If you look at the last month, it was smooth sailing. The coronavirus was a thing. Some people were worried about it. Most people were not. The cases started getting more and more, and then just have fallen off a massive cliff. So it's a very interesting time, and this is probably my favorite part of this whole thing. This up and down, up and down, up and down, and then back down. Just crazy. Absolutely crazy time to be an investor, but it's also a good time to be an investor. If you haven't started investing, I think this is perhaps one of the best times to get investing or invested. We were right around that 30,000 in the Dow range. Now you guys see we're below 26,000, and it wouldn't surprise me. We were down to about 24,000 something, if I'm not mistaken. Okay, so 25,000. I believe we got a little bit lower than that because we were definitely within the 24,000 range. And we may never see those numbers again. Now, granted, these next 3 to 6 to 9 to a whole year to a year and a half, however long it may be, till we truly solve this coronavirus thing, we may not get. It may fall lower, it may not, but that's the beauty of the market is no one knows. And one of the best things I've talked about on my channel is time in the market is better than timing the market. If you're a newer investor and if you're young, if you're 20 years old, even if you're 30 or 40 or even 50 years old, getting in the market now, you will earn money over the long run. And that's what we need to be as investors. We need to be focused on the long run. Obviously in the short run, you could be down several hundred, several thousand, tens of thousands, hundreds of thousands of dollars. But in the long run, the beauty of the stock market is if you guys look at the charts over here on the right, what's it doing? It's moving up. It's moving up. You guys can see the dips right there on that right chart. It goes down. But over the long run, it's not linear, obviously, because it's very volatile, but it follows that line and it's always going to go up. And unless something major goes wrong, which obviously hasn't happened before, there's been recessions and stuff like that. But over the long run, I believe it's around 8%, the stock market will go up. So clearly in the short run, this is a bad thing. And we can read some of the articles. Wild stock market swings are emotionally and intellectually wearing on Wall Street. And I think a big part of that is it's those are two key words, emotionally and intellectually. I think the more intellectual people are staying in the market, not selling everything. But most of this, in my personal opinion, is driven by emotions. The coronavirus or COVID-19, whatever you want to call it. I know some people are getting demonetized for saying coronavirus. I believe it's mostly driven by emotions. And I think that's one of these things that us smart investors need to understand is yes, it's an emotional time. Yes, people are, there have been fatalities from it, which is a terrible thing. But when you look at the numbers versus the normal flu or some of these other coronaviruses, because if you guys don't know, the coronavirus is, I believe it's the seventh one there have been other coronaviruses such as SARS and diseases like that that have happened in the past. If you look at the numbers are so minuscule by the number of deaths. I believe from the normal flu, there's been something like 12,000 deaths already this year, or something to that effect. And from the coronavirus, there's only been 3,000, which, again, that's a big number in the grand scheme of things. Obviously, that's terrible, but it doesn't stack up to the flu or some of these other diseases that are truly taking out more people, which isn't a good thing either. So this keyword right here, emotions, that is what's driving the market right now. And I think even when the Fed cut the rates, what was driving their decision to do that was the emotions of the people involved in the market. And as you guys see here from CNBC, Wall Street braces for more volatility as wild swings become the new normal. And I think it will be the new normal for the next, as I said, 3 to 6 to 9 months to a whole year. They don't really know when they're going to find a cure. The president and the vice president and the people working with him are putting a lot of money and a lot of resources towards solving this problem, which I think is a good thing. And that may boost, these healthcare stocks, Pfizer and United and all these different healthcare stocks that we have. As you guys see here, this is the first time the S&P 500 had a week of alternating gains and losses of more than 2% from Monday through Thursday. Daily swings like this over a 2-week period were only seen at the peak of the financial crisis and in 2011 when U.S. debt was downgraded. The coronavirus outbreak keeps investors on edge as global cases of infections surpassed 100,000. And the thing that's going to happen here in the next week or the next month or whenever it is, when they get the more sophisticated tests that truly indicate who's being affected and they can test for the virus better, these numbers are going to blow up. They're absolutely going to go insane. And, it may reach 1 million. Obviously not just in the United States. It may do that in the United States. I don't know. But, it may reach 1 million. It may reach 2 million. It may reach 10 million people infected. I don't know. I'm not a doctor. I'm not a scientist. I'm not anything like that. But, these numbers from 100,000, if they're already at 100,000, they're going to blow up. Because these people, there's people right now sitting around who don't know they have it. They may have some symptoms, but they haven't really gotten themselves checked out. They may not really do a whole lot of anything. But when these tests come out and they're more available and what have you, more sophisticated, these numbers are going to inflate within the next month or so. And when that happens, these emotions that we talked about, as you guys see over here, these emotions, they're going to expand again. They're going to blow up. These emotions are going to be like, hey, these numbers are crazy. These numbers went from 100,000 to 1 million in a day or whatever it may have been from when these tests came out to now. That's crazy, and these emotions are like, hey, this is not a place I want to be in. I don't want to be involved in the stock market. And I do believe the stock market is going to go down even further. But that shouldn't scare you for the long run, because as long run investors, we need to understand that it will go up over time, as I have talked about. So when that does happen, I think we're going to see a lot of great buy opportunities. I've tried to invest. This isn't my portfolio. I haven't really updated my M1 Finance compatibility with my brokerage account ever since I switched over. But there are a lot of great buy-in opportunities emerging. Whatever it may be, if you're interested in airline stocks or travel stocks or whatever it may be, hotels, amusement stocks, whatever it may be, those sectors of the market are exposing a lot of great opportunities because people are not wanting to travel right now. They're not wanting to be around people, which may affect the restaurant industry, So all these different sectors of the market and to some extent the market as a whole are being affected. You could look at a Starbucks stock. I believe it's S-Bucks. Let's click on it right there. $75. A month ago, it was at $90. Now it's at $75. 6 months ago, 95. I believe it reached over 100 at some point. Yeah, as you guys see right there, 98, 99. I believe it did go to over 100 in August. That wasn't that long ago, and now you look at it, $75. these stocks are being affected, but they're not truly, this isn't what they're truly valued. If you look at the target price for, if we can find it, for Starbucks, the average is $93, the high is $110, and it's sitting at $75. Now, do more research on that. That's a very basic look at it, and those numbers are appealing. Again, one of the stocks I talk about all the time, not Disney. This is a company that I have bought a couple more shares of. 115 is so underpriced for a company like Disney. That is insane. And if you go look at what the experts are saying on it, obviously it's rated a buy. The low right now, it's below what the lowest analyst has put it at. The lowest analyst put it at $120 a share. The average analyst put it on $160, and the high is $180. And it's sitting at, what's it sitting at? $115. I bought more shares around $120. I'm planning on buying more shares if I get the resources to do so. And again, obviously that's a very basic breakdown of it. But you see these numbers, and then you look into the finances, and you think to yourself, so a month ago, this company was great, $140 a share, and it's just collapsed since then. And you're like, is it the same company that it was a month ago? And maybe it's even better. And I think the answer to that question is yes. And then you can dive in and look at all the financials, and then you can ask that question again. Is it still the same company? What happened here? And the biggest answer is the virus that has been spreading. And I just see these opportunities, and if you have the money to put into the market, you find these great stocks. One thing you can do to ensure potential safety is find good dividend stocks. And like I've discussed is, Delta, another company I'm invested in, is an airline industry who you're not going to really see a whole bunch of growth from. They were up towards $60 a share at one point. This is a company that Warren Buffett himself is invested in. He's invested in several airlines, whether it's American Airlines or Delta. And you look at the dividend, 3.5%, $1.61 per share over the course of a year. This is a great dividend stock. Like I said, you're not going to get a whole lot of growth out of it, but it is a company that's going to be good for the long run, and it hasn't changed outside of people not wanting to travel. So if you really want to barricade yourself a little bit more, you can go towards the dividend route, not really looking for the whole growth route, because I have seen a lot of people who have said that when these earnings are getting posted, or when they do get posted, whenever that is at the end of the quarter, or whenever they may post their earnings, they're going to get overshadowed by the fears of the coronavirus. And I just think you guys have to be smart about what you believe. And when we focused on the long run investing, you guys should be fine. That's my opinion. As I've said, the market will go up. You just have to focus on the long run. The short run will be scary. The short run will be driven by emotions, but the long run, we're going to be okay. That's the bottom line. And I think a lot of this has been overblown. And not to keep the video super long, I want to end it here in a couple seconds. We're going to be okay in the long run. And we may go down. We may go down to 23,000. We may go down to whatever it may be in the Dow. We may go down to underneath 20,000. I don't think that'll happen, but we may. You never know. When the market's being fueled by such emotions and all these different things, you can never tell, and that's the beauty of the stock market. So I'm going to wrap it up here, guys. If you guys haven't already, go ahead and hit that like button. Leave a comment on what you guys have been doing in the current stages of the market, different companies you've been investing in, or have you been holding your cash for the sideline like I had been for the last several months. I do think this is a beautiful time to invest. So go ahead and leave a comment in the comment section below. And if you haven't already, please subscribe to the channel. And I will try my best to put out some more great videos for you guys as we ride the volatility of the stock market. So until next time, guys, happy